Hey everybody, welcome to your latest Carson's Take 5 with Sonu and Ryan. Sonu, we're titling this one, Wrapping Up a Great First Quarter. High level, stocks gained more than 10% for the second quarter in a row. We've seen a strong economy. We've seen lots of different things. I mean, let's just say this. Why in the world did stocks just gain more than double digits for the second quarter in a row for like the first time in more than 10 years? Well, what happened?
Two things. Profits are rising, right? And profit expectations. It's not about what profits, how much they rose last year. It's about how much investors expect profits to rise over the next year and following years. And why are profits rising? The economy is strong. It's as simple as that. Why is the economy strong? It comes to the fact that the labor market is strong. Incomes are strong. That's driving consumption. And that's the story of, I think, the first quarter.
No, it sure was. And speaking of consumption, I am standing in Napa Valley, out in California right now in Napa, and it's pretty early here. We're doing this a little early in the morning. And so the joke was I came outside, I'm wearing my T-shirt, my packs, and I got some shorts. I was going to get in a hot tub, which is right over there. It's really cold right now. It's 50 degrees. So if I start shivering, you know why. But you've done one of these in real cold weather, so I should not be complaining. But let's so we had another really good solid quarter for stocks. It is hot tub weather. But let's look at the sector breakdown, right? We saw tech and communication did well again, but we also saw things like industrials, right? Financials, materials have started to do well. Those cyclical areas are kind of taking the baton. I don't know if they're taking it quite from tech, but you think they're starting to?
Yeah, no, I think, like I mentioned, the story of the economy has been consumption, but we're getting some icing too, right? Manufacturing is coming back. Construction's running strong. And you think about the cyclical areas of the economy coming back, and then you translate that into markets, and you have the cyclical sectors coming back as well. Yeah, like you mentioned, financials, industrials, materials, and energy, especially over the last month. And then small cap stocks, especially mid cap stocks, right? These are also areas of the market that are geared to a stronger economy, especially, like I said, the cyclical parts of the economy. Mid cap stocks have had a really good March. I mean, just last month, right? They've lagged a little bit relative to large cap stocks over the entire quarter, but there was a good run up last month. So that's really positive.
No, the mid caps are kind of like the Jane Brady, right? It's kind of, no one talks about them. They're right in the middle, but they're doing really, really well quietly. And then if you look at kind of, again, on the sector breakdown, your defensive areas like your utilities and your staples and real estate, those groups lagged during the first quarter. And again, what have we said before, a lot on these Take Fives? We want to see the defensive things kind of lag. They can still be higher, and for the most part they were higher, but they lag the markets. That's kind of the market's way of saying the more offensive cyclical things leading is a positive sign. But so let's talk about fixed income for a minute, because there's always a yin to a yang. Stocks are just up again. Well, best first quarter since 2019, really good first quarter for the S&P. We talked about it, but bonds, last I looked, they were down a little bit for the quarter, and that's kind of an unfortunate trend we've been seeing lately. Talk to me about fixed income the first quarter.
Right. It's not the worst thing when bonds sake, when stocks are zagging. They're supposed to be the edge. But, I think we've been so used to seeing bonds go up over the last decade along with stocks, right? So it almost feels abnormal when the opposite happens. But that's what, historically has happened. The correlation is negative. It's not the worst thing in the world. But I think why rates went up, basically. When rates go up, bond prices go down, just the way it works, and the other way around too. Why rates went up is we got some strong inflation data in Jan and February. So there was a big narrative shift within markets. We came into this year, at the end of last year, everyone was thinking that the Fed would cut rates about 6 to 7 times, each time 0.25%. But that's shifted now, right? We've got firmer inflation data. And now the market's saying, maybe the Fed will only cut 3 times. Right? We'll take them at their word. By the way, the Fed has always been in that camp. We've also been in that camp that we're likely not to get more than 3 to 4 cuts this year. Markets have come to terms with that. The good news is, equities have rallied, even though rate cut expectations have fallen.
Yeah, I think that's probably one of the bigger surprises. If you said the first quarter that you're pushing back when the first cut is and a number of cuts, the market continued to do well. You think in 2022, very quickly here, the Fed was hawkish. Why? Because we had generational highs in inflation. We had lots of problems. So they were hawkish then. They're a little bit more hawkish now. We're not saying the Fed is hawkish, but compared to what we thought they might be 2 months ago, a tad more hawkish. And why? Rates have gone higher because the economy is stronger. So let me wrap things up here. When you have a 10% first quarter, like we just did for the S&P 500, the future returns the rest of the year have been higher 10 out of 11 times. Okay. When you are up the first 3 months of the year, January, February, March, like we just were this year, the rest of the year has been higher 19 out of 20 times. The bottom line, this has been an amazing first quarter, right? We had a really good last year. Maybe some well-deserved consolidation, be perfectly normal here, but big picture, we've been overweight equities. We've been saying for a while this is a bull market. So I think from the fundamental front, the momentum front, the technical front, the sentiment front, we continue to think this is still a healthy bull market for equity investors. With all that, everybody, this is your latest Carson's Take 5, talking about a strong first quarter. We'll see everybody, I guess, in the second quarter next week. Take care.